Gulf Oil. Quality, endurance, passion.
Welcome everybody, and thank you very much for attending this very interesting show, friends. This is a show where we introduce interesting corporates and have a face-to-face interview with the company management. And friends, today we have a very interesting guest from a company which is a very leading player in the lubricant space. The company's name is Gulf Oil Lubricants India Limited, and we have Mr. Manish Gangwal, who is the CFO of the company. Manish ji, thank you very much for sparing your valuable time and giving us an opportunity to talk to you. We would love to have your insights on the company so all of us can understand your company's operations a little more better.
Thank you, Avinash ji, for having me, and Profit Mart for having me on this show. It is really a privilege and an honor to have to be here.
Okay. So Manish ji, my first question is, directly related to your quarter 4 financial performance, where we saw a very strong volume growth in your numbers. And basically, you all have always outperformed the sector growth. So could you tell us what exactly, did the company do in quarter 4? How was the market in quarter 4? And how did this all get reflected in the numbers for Gulf Oil? So if you can give us some color on this.
Sure. Basically, you see, quarter 4, we saw in the beginning of quarter 4, actually, there was this second or third wave of COVID, which came, very mild wave, but it was there. So it impacted partially in the month of January. But from February onwards, I think the market bounced back quite sharply in terms of demand conditions. So overall, being the year end, the quarter always is a high quarter for us. March is usually a high quarter, because a lot of distributor incentives are attached to the yearly, performance and all. So typically March is a high quarter, but also backed by the good demand conditions across segments, mainly the diesel engine oil side, because also we have seen that, commercial vehicles and all have picked up really sharply over the last 6 months. So the demand coming from OEMs, demand coming from even the retail market, rural market, so all demand conditions were aligned. And at the same time, we saw that before the Russia-Ukraine war, the commodity prices, including crude, were in a range. And rather, COVID was sort of not having that impact. So things were rather going in the good trajectory of raw material prices, and was also helping in a way our input costs. So both played out. And that helped us deliver a very good Q4 last year.
Okay, thank you, Manish ji, for answering that. Now tell me one thing, that considering that fourth quarter performance was slightly better than expectations, and market also helped the company very well. Do you expect that this performance could obviously also play out in the first or second quarter of the current financial year, that is FY23? Without giving numbers, if you could give us a kind of a broad idea as to how is the demand conditions on ground as of date, if you could give us some idea on that.
So overall, Avinash ji, we have been delivering 2 to 3x the market growth rate historically, and in some years actually 4x. The market of lubricant, is growing at 2 to 3%. Because of the long drain products coming in, good technology products, high technology products coming in. So market has been growing 2 to 3%, but we have delivered CAGR 10% plus volume growth over the last 10 years. And that has been our trend. We have been following our segment-wise strategy. So we have been, overall our market share is around 6%, I would say, in automotive and industrial lubricant market. So we have a lot of headroom, and we always try to deliver, 2 to 3x the market growth rate. And currently also, as we speak, the demand conditions are robust. So from demand side, we are continuously seeing good demand coming from OEM. This is an agri season also. So good, robust now. Initial period of April, May, there was a slight hiccup on the monsoon, delayed monsoon, but now monsoon has covered up very well. And we are seeing good demand conditions from agri side as well. Plus, personal mobility also has picked up, because COVID is almost taken by people as granted now. So overall, I think mobility has improved for people, and we are seeing good demand conditions across all sectors. And this year, we also believe that backed by also a very good industrial product demand, because manufacturing is also at all-time high, near to if you see the PMI data and all. So overall, we are seeing robust demand conditions, and we hope to deliver our 2 to 3x this year as well.
Okay, fine. Manishji, my next question would be that, for FY22, what was the B2C percentage and the B2B percentage? If you could tell us that, and normally, in terms of margins, what really makes more money for you? Is it the B2C or the B2B part of the business?
So historically, we have been, last 3-4 years, if you see our B2C, B2B ratio is around 60-40. In some quarters, it can be, 65-35, or in some quarters it can be 55-45, but in that range of around 60-40, 60% being B2C business for us. And when I say B2C, it is including our retail market as well as the franchisee workshops. So these two sectors, we call it as B2C. And yes, these are better margin businesses as compared to the B2B market. But there are product categories even within B2B where synthetic products, very high-end greases, all these are even a very good margin businesses in B2B. There are pockets of good margin as well. So overall, as a trajectory, I would say B2C is a higher margin business, and that is nearly 60% of our volume, and 40% being B2B, but we have been growing in both the segments quite robustly over the last many years.
Okay, fine. Manishji, now one question on the marketing side. How does Gulf Oil plan to actually increase its market share in southern India? In fact, in South, I think the market share has not grown to the extent what it should have. So, what is the company doing here to basically increase its market share? Because obviously, this is one pocket which is showing pretty strong growth. So, any kind of marketing plans which you have which could increase your market share, in the next say couple of years?
So just to tell you, Avinash, our South India market share in diesel engine oil category is very high. We are actually the leading player there because of the presence of OEMs like Ashok Leyland and all. So we have been a long-term partner for Ashok Leyland, and their presence in southern India in commercial vehicle is very high. So we have a very good market share, excellent market share in South for diesel engine oil. But our personal mobility market share in South was low. And that is because, the focus was always on the diesel engine oil, and, typically the other sectors slightly got, I would say, not given that much attention. But now we have taken up a very segment-wise, region-wise approach. And if you see our latest campaign, which is including featuring our brand ambassador, MS Dhoni, that is purely centric on South India for personal mobility, and including some campaigns on diesel engine oil, because that's where we want to continue to remain the market leader. But overall, in a very targeted, multilingual South India focused campaign is currently on ground as we speak. So we are going into a very regional, even ANP and other efforts on the ground, ATL, BTL, on a very regional basis now to improve our market share for personal mobility in South India as well.
Okay, fine. Manishji, now you mentioned earlier that the lubricant market is growing by about 3 to 4% annually. So going forward, whatever incremental market share the company would bag would obviously be capturing some more market share from competitors. So any ground level marketing kind of strategies which you have planned to ensure that this market share actually increases significantly in absolute numbers, because we have seen that already Gulf Oil is increasing. But in terms of the market positioning, I think you all are number 2, if I'm not, if I'm not wrong. Can you please explain that, in the next, say, 2 to 3 years, can we assume that this market share on the whole, pan India, can we see a reasonably good increase, considering that the market is rising, you all are outperforming the market? So all this gets reflected in a much more higher market share, which obviously leads to better top line, better profitability. So something on that, if you could share, please.
So you're absolutely right. Our brand recall, if I can tell you, is very high. In terms of overall brand recall, top of mind recall, our internal surveys suggest that we are number 2 brand in lubricant, in the lubricant industry. Now we have to really translate that high brand scores into, actual market sales as well. So we have been continuously gaining market share over the last 10 years by outperforming the market 2 to 3x. And we are, as I mentioned earlier, we are quite hopeful to deliver 2 to 3x even in the foreseeable future. But along with that, we are doing a lot of stuff on the ground in terms of BTL activities, in terms of increasing distribution, because for retail business, distribution is very key. And our efforts on the ground to increase distribution across product categories is always a big focus area. And we are actually re-energizing, or I would say rebooting those initiatives again post-COVID, because in between 2 years, because of COVID restrictions, the activities on the ground were slightly, controlled. But now we are all out. Our teams are all out to, convert a lot of BTL activities and convert those into sales. So we are quite hopeful of the, next 2 to 3 years in terms of our market share gains.
Fine. I think nice to hear that and very well articulated, Manishji. Now, Manishji, tell me one thing. What is the company's strategy as far as the electric vehicle segment is concerned? We have been hearing a lot of noise and a lot of excitement for electric vehicles. In fact, recently Mahindras have launched their new electric business. So, clearly electric seems to be the theme as of now. So on that aspect, what are the kind of products or what are the kind of strategies Gulf Oil is planning? So, it ensures that, it gets a decent share of this growing market also.
Yeah, so first of all, Avinash, let me tell you that we have done all our studies, we have spoken to experts and all. Our lubricant market in India is going to continue to grow for the next 15-20 years. So there is no degrowth expected in the lubricant market. First of all, that let me, clarify that. But having said that, we are also quite keenly watching the space of electric vehicle, emerging electric vehicle space. And we are studying all the value chain in the EV space. In an EV space, you can play many roles, and we are evaluating all those value chain points in EV. And obviously, you have seen that we have taken 2 small bets in one in Indra Technology, which is a charger with manufacturing company in UK, and another is Electrify, which is a software as a service provider for electric vehicle batteries and chargers. So we have taken our small bets, but the sector is a very, very nascent stage in India currently. We are studying this sector very closely, and definitely we will play some role in this emerging EV space as well, because as a green environment, we are also quite equally keen that Gulf Oil must play some role in terms of using its core strength of distribution, its core strength of brand, and our pan-India network to play a role in this emerging EV space. So we are looking at all the possibilities, and and when we see some crystallization, we will definitely announce that as well.
Oh, fine. I think, Manishji, one more thing which I wanted to clarify is that Gulf Oil has also made some investments in EV fluids. If you could add some, color on that, like what is the investment for, and how big is the opportunity, as per the company, how strongly can it grow in future? If you could share your thoughts.
So Gulf, as you know, is a global brand. So we have a large presence in 100 countries across the globe. And especially in the Europe market and all, we see that EV has already taken some percentage of the vehicle on the road. And we have all the range of e-fluids which are used in the vehicle space, EV vehicle space in Europe and all. So that product categories we have launched in India. But the market size here currently, the vehicle on the road and the ground are very, very small to even talk about any futuristic projections. Yes, we have complete range, but we'll have to really see how the market emerges here in terms of overall population on the road in terms of EVs. But that's a very, I would say, a medium to long-term call as of now. But we have the full range ready, and we are ready to market that. In fact, we have started some trials with some of the OEMs also for those products in India.
No, fine. Manishji, I think very well articulated, because as you rightly mentioned, the market for electric vehicles is yet to gain scale and size in India. But tell me one thing now, coming on the capital allocation part, I think the company has been doing a very good job, good dividend payouts. In fact, last year I think you all made a buyback also at 600 rupees. So you all have a lot of cash on your books. So technically speaking, how will the company plan its capital allocation? Will it stick to the existing plans of ensuring that first, obviously the priority would be on reinvesting in the business, and obviously any surplus cash will be given back to the shareholders? So will this strategy continue hopefully for shareholders in the coming years also?
So, you are right. We are a debt-free company. We carry a decent amount of cash on the balance sheet, and we continue to generate cash every year further. So that is something which is the robustness of the business. We have good, very decent ROCE, ROI, as you know. We are, as a board, we have been looking at various investment opportunities. We just discussed EV as one of them. So we are looking at all the spaces in terms of investment. So the priority obviously is to first invest in the business. And at the same time, the board has been cognizant of the fact that the cash, excess surplus cash should be returned to the shareholders. And we have been paying a consistent dividend payout policy. As you mentioned, we have recently announced a buyback also at 26% premium to the market. So we have taken all those steps. And if there is an opportunity to invest in the business, invest first there, and surplus cash to be distributed back is the policy. And I think the board is quite cognizant of that fact. And as soon as there is an opportunity, they will take further decisions on that.
I think rightly said, because Gulf Oil has always been a very strong cash compounding machine, and I think this is very well visible in the return on capital employed, ROIC. Manish, tell me one thing now, since you spoke about the automotive sector, like now clearly green shoots are visible. We have seen green shoots visible on the passenger car side, on the commercial vehicle side. Two-wheelers have been slightly sluggish. So your sense as to now with all these green shoots visible, can all of us, that is from the investor community, expect better kind of top line growth at least in the next say couple of years? Because you all have remained you have done very well in even challenging times. But when the market improves, obviously the multiplier effect will play off. So can we safely assume that what top line growth we have seen in the last 2 years, would it be better in the next 2-3 years if hopefully automotive markets continue to flourish in a healthy manner?
So you're absolutely right. I think the tailwind from auto sector, which was lagging for the last 2-3 years, the auto sector was not performing that well, has now come back, and we are seeing a lot of demand coming from even OEMs, as we discussed earlier. So there are green shoots, and our strategy of going 2 to 3x the market growth rate remains. And also, top line is a function of price increases also. So we have seen that because of the input cost going up, we have taken significant price increases to pass on the input cost effect to the customers. So it is an impact of both volume growth and price increases taken to pass on this. Are seeing a robust top line growth in the last years. In fact, last year we have grown our volumes by 17%, sir. When the industry overall will be back to low single-digit growth. So we had one of the best years in terms of our volume growth. So we continue to focus on top-line growth, and we will definitely be, looking at future in a brighter way because of the auto tailwind which is coming.
Manish, my last question now to you would be that you mentioned rightly that the company generates a lot of cash. So can we expect the advertising and the branding budget, in the coming couple of years to possibly, increase, so that, your market share growth also gets accelerated? And another question to that is, we have got Mahendra Singh Dhoni as our brand ambassador, Mr. Hardik Pandya. Any plans for adding any new brand ambassador, possibly, if the company wants to, add a little more, excitement to its brand? So anything on that, if the company is planning, if you could share with us, please.
So, Avinash, our, I would say, core principles have been quality, endurance, and passion. That is the brand values Gulf globally has. And endurance is something which has been a very clearly followed path by us. So we even endure our relationships. So all our relationships have been long term, and our relationship with our brand ambassadors also are long term. And I would say both are youth icons. Still, they are doing exceptionally well in their field. And also with Chennai Super Kings, that also is now 10th, 11th year of partnerships with them. So all our relationships are very long-term and mutually, coexisting relationships, I would say. And we definitely are looking at, now that the markets are opening up, our, A&P, we have been spending close to 6-7% of our top line back in A&P. But with the top line increase, which we have seen, that is slightly moderated now to, let's say, 4-5%. But on an overall quantum basis, we continue to invest in our brand. And in spite of reaching in the top 2 position, we continue to build the strength in the brand, both by ATL as well as BTL activities. So there are, in lubricant industry, there are a lot of BTL activities which are done to help generate, good recall and sales. So we are focusing on both ATL and BTL, and we will continue with our partnerships which are enduring for long term.
I think good to know, Manishji, that Mahendra Singh Dhoni is going to be continuing with Gulf Oil, because he is definitely a big youth icon, and there's no doubt about it. So anyway, Manishji, I think thank you very much for the time you spent today. We could understand a lot of deep insights on the company, and all the best for you in the coming quarters, and we'll definitely keep in touch in future also. So thank you very much, and best wishes.
Thank you for your time, Avinash ji, and we really appreciate this. Thank you.